Lucid Motors potentially merging with Churchill Capital's CCIV SPAC stock has been making headlines for over a month now. The market excitement for electric vehicles, mixed with the enthusiasm towards SPAC stocks, created the perfect recipe for what we are seeing today. CCIV stock just recently broke the $60 mark this week, while we still do not have official confirmation regarding the merger with Lucid Motors following through. While most are familiar with the news, rumors, and theories going around justifying that Lucid and CCIV will merge, others are quick to caution us retail investors about buying and holding this SPAC stock based on rumors alone. But by doing just a bit of research, we can see that in fact, institutional investors now own more than 55% of the publicly traded CCIV stocks. However, none of these online articles actually give us warning about what this overwhelming control by large institutions could mean. In today's video, we'll be going over the influence these institutions have over the stock, reviewing what their majority control could mean, and what you should do with your CCIV positions. So let's jump right into it. Hello everyone, this is Mark with MC Stocks. Remember to subscribe and hit the like button for more videos like this one. And as always, remember to do your own due diligence when investing and seek a financial advisor for professional advice. So let's start off by taking a close look at how much these institutional owners control of Churchill Capital's CCIV SPAC stock. We will be referring to the data provided by fintel.io to analyze this. Right at the top, we can see that a staggering 140 institutional owners are invested into CCIV stock. Of the 207 million shares that are publicly available, these institutions currently own more than 55%, more than half of all shares. For comparison, the last time we checked on the level of institutional ownership was on our February 3rd Big Players Buying video. Back then, there were only 68 institutional investors, and they only owned about 29% of the total shares. To be clear, back then, it was still a large percentage of CCIV that was controlled by non-retail investors, but to see the number of institutions invested more than doubled, with more than half of the stock controlled by these institutions, is astounding. So who exactly are these institutions? Looking at the data fintel.io is providing us, we can see all of these institutions in green creating new positions, ones in red selling their positions, and ones in white adding to their existing positions. And you can immediately notice that the green and white far outweigh the red. Scrolling through the list, we can see a lot of big name institutions who just recently created positions in CCIV. Here we can see Blackstone Group buying 4 million shares worth about 40 million on the 16th. Likewise, HSBC, Goldman Sachs, and Morgan Stanley each started CCIV positions of 3.3 million, 1.8 million, and 185,000 shares respectively. Even Citadel opened a position of 4.5 million shares worth about 45 million, one of the largest single purchases of CCIV. And this is without mentioning the other investors like JP Morgan and Bank of America who have been adding to their positions, and without going through all of the others on the list. So clearly, large institutions are making huge plays with CCIV stock, and are arguably the ones driving up the stock price given their huge, well-paying interest. But from online publications, we can see the sentiment that it is the retail investors driving up the price of the stock just based on merger rumors. Here we can see this FX Street article published on the 17th, stating that retail interest was again strong with Twitter and other social media platforms strongly following the progress regarding the Lucid CCIV merger. This coming right after stating that the stock spiked above $50 after the recent Reuters article stating that the deal was near completion. Furthermore, in this Investor Place article, we can see that the title tells us to not hold CCIV with, quote, diamond hands, using Reddit's Wall Street Bets lingo to catch retail investors' attention. And reading into the article, we can see that they state that it is the retail investors that are aggressively buying into the SPAC. They even go as far as to advise following the buy the hype, sell the news trend. But none acknowledge the threats that we may face with a majority of shares being held by institutional owners. It is a bit surprising to read that retail investors are the ones piling into this stock, as though that was what caused the massive run-up in the stock price. All the while, we clearly saw on Fintel.io that the large institutional investors are the ones rushing in to grab shares, and so much so that they now own more than half of CCIV's stock. So what can we do in this situation? Well, as always, do your own due diligence and invest what you're willing to risk. But if you're following the simple follow the money strategy, then you're in luck. We can clearly see all of the money pouring straight into CCIV stock in anticipation of this merger deal, with any dips having quick V-shaped recoveries. But with CCIV now possessed mostly by large institutions, we may expect the jumps in the stock price to be quick and sudden. For instance, a handful of the 140 institutions deciding to let go of their positions at once could send the stock plunging out of the blue. Similarly, at the first sight of a dip, we can see shares immediately get snatched up at discounted prices by these large buyers. And we need to look no further than today's intraday trading chart to see an example of this occurring. We can see this sudden, steep 11.5% dip near the end of trading hours. And checking the Trade with Alerts Twitter account, we can see this large 41.5 million transaction happening right at the bottom of the dip. These institutions are most likely the ones selling massively at once, triggering many stop losses, and are the ones taking advantage of a dip by buying your sold shares at a discount. By doing your own due diligence and having a clear exit strategy if you're trading, or additional entry points if you're planning to buy more, you can take advantage of any potential swings in the stock price in the near future. Institutions are leading and taking advantage of what some are calling a retail-driven phenomenon, but that doesn't mean you cannot take part of the price action. If you are looking to buy shares of CCIV and need a brokerage, be sure to use our referral links for M1 Finance in the description below. M1 Finance is doing a great offer currently where you can get a free $30 using our referral link. So use the link below, earn an easy $30, and don't miss out. Good luck everyone with your holdings, and stay tuned on our channel for any news regarding this Lucid CCIV merger. Thank you for watching today's video. Don't forget to subscribe and hit the notification bell to get notified when we release our next video. Please like and share for more videos similar to this one, and comment below with any questions that you may have so that we can address them in future videos. Thanks.